Welcome to the September 25th, 2023 Advanced Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, your financial weatherman, with your weekly fast-paced tour of the global financial markets. I'm also president, McGowanGroup Wealth Management, the team that cares, a team of 10 based right here in Dallas, serving affluent families, business leaders, and investors. The videos that we produce are designed to help you make great decisions in the year ahead. And one of the things we do is we debunk headlines. Headlines that are meant to stir you up. We call them clickbait. And they're salacious, they get you spun up with anxiety, and it can often lead you the wrong way. Coming up is the dreaded government shutdown, and both parties blaming each other for being intransigent and profligate spenders and radicals and all that. So, what really happens if there's not a budget passed? Wow, the government would actually have to live like the rest of us on what they bring in. God forbid they actually spend less than they make. Well, revenue, this is $6.2 trillion. There's a reason I'm repeating this after last week, because we're coming up on that dreaded government shutdown. And the Treasury Secretary, irresponsibly, in my opinion, in May, yelled that she was going to default June 1st. Not true, and I'll tell you why. That was the debt ceiling, right? And that was going to be a default. All right, how do you cover the vital items and make the budget work? Here's net interest, $640 billion. Then you've got defense, Social Security, Medicare, Medicaid. Everybody agrees that those need to be paid, or it would technically be a default. But look in this government budget. Other, $834 billion. Other, nearly $1 trillion of other. Wow, that's quite a budget. Then you have non-defense discretionary spending, $932 billion. That's $1.76 trillion that is not necessary for the four vital operations of government. That's a wow. And they borrow $1.4 trillion. If they stop those two unnecessary categories, what happens? Wow, you've actually got a surplus of $300 billion. So what is the shutdown? You're just stopping the unnecessary parts and only paying the vital parts. That's not a big deal. Okay, so now that we've put that salacious headline to rest, government shutdown. Okay, this is the price of a 20-year treasury. So let's say you bought the Vanguard long-term government securities fund. Okay, sounds safe. Long-term, government, what happened to the price? Here it was $155. This is the price of a 20-year treasury. And now it's $90. That's a pretty significant drop. It dropped 40% in value, and it's a long-term government securities fund with an average duration of 20 years. That's painful because the yield up here was only 2%. Well, the bond market, that's the yields going up and the price moving down. Now you understand that inverse relationship. If you want a higher yield, you just reprice the bond. 10 and 30-year treasuries and 20-year treasuries hit the highest since 2007. You can get over 5% in a 2-year treasury, and where appropriate, we'll do that for people and put it in a non-managed account, and so they can just keep the 5%. That's not a bad play. If you said, I just want to make the safest 2% for the next 2 years, that's okay. Longer term, though, you can see the duration risk. Wow, what do we do about it? This is the Dow, by the way. 34,000 on the Dow. September is the statistically worst month for equity prices. And it lived up to its name, September. 35,000 to 34,000, that's about 3% on the Dow in a single month. So we had a genuflect. Jerome Powell this week comes out, basically says higher interest for longer. We think we're going to do one more hike. He's being tough on inflation because he hates equity market rallies. Why? Well, when the market goes up like it did in 2021, people buy stuff and you get inflation. So he doesn't want people to be happy and buy stuff. He just wants inflation to go to his mythological 2%, even though the 110-year average is 3.3%. What's he thinking? Well, okay, maybe he needs to focus on continued employment and prosperity, but he's got another problem. The estimated losses in commercial office buildings in the United States came out this week. Estimated losses, according to McKinsey, are $800 billion in value that's disappeared. Who finances commercial real estate? The banks. Who are the Fed's customers? The banks. He's killing his customers, and that's going to be a big focus in the Fed by the end of the year because a lot of these buildings can't refinance. All right, this is crude oil. You want an inflation hedge? Energy infrastructure historically has been a great inflation hedge. Yes, with volatility in price, there's value at risk of loss, especially when oil goes to 60. It's now 90. And this week, it got over 92 for the first time in this cycle. That is the highest, really, since 2022. And you're starting to see constraints in supply, or demand exceeding supply is the best way to say it. And that's going to continue for a while. Goldman says oil's going to 100. Energy infrastructure, many companies are trading near 5 times cash flow. That is a very attractive cap rate. It's also a good inflation hedge. Initial public offerings, we always say beware the IPO, initial public offering. This is ARM. They are a chip designer based in Great Britain, one of the biggest IPOs so far in the last couple of years because the market froze. They come out at just under 60, they go to 69, and they settled out at 50. So it looks like we probably shouldn't buy. This is an hourly chart, by the way, so you probably shouldn't buy as soon as the thing is released, just based on this. But initial public offerings froze after the equity market took such a huge decline in 2022. Now, this is Instacart. It's actually called Maple Bear. I'm not sure why. Anyway, they come out, reach $42 in the first few minutes, and boom, now 30. So that, I don't know if you would call that a successful IPO, but they got the money. So don't buy it on the initial trade. And this one is Klaviyo. And here you've got $38, and then it settles back to $33.50. But it's a sign the equity markets are pretty healthy and still positive for the year. I'm Spencer McGowan, President, McGowanGroup, and you can find us at networthradio.com. Set up your time for a brainstorming session. We'll update your plan for 2024, 25, and 26 because we've got key projections from the Fed that we're building into the forward plan. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss, at networthradio.com. You can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.